Here's a magic trick with this pen. Look at this. You just get the magnetic attraction and, oh, look at that. It just jumps right onto the pen. Anyone can do that. You just squeeze it with your fingers. Stacy?
Max, that may have entertained some people, but not me. Or not I, is it? I have a headline here. We always talk about legacy banking system, new banking system, and the legacy banking system, which is gold. That's the original individual economic sovereignty. But here we have a story kind of mixing the two. This is the one going backwards. So Bitcoin mining equipment maker Canaan files for $1 billion IPO. Not an ICO, an IPO. So Canaan Incorporated, the world's second biggest maker of Bitcoin mining hardware, submitted a listing application to the Hong Kong Stock Exchange. Morgan Stanley, Deutsche Bank, Credit Suisse, CMB International Capital are joint sponsors of the proposed offering, according to a preliminary prospectus. Bloomberg News reported earlier Tuesday that Canaan had filed for an IPO that would raise about $1 billion. The filing didn't say how much Canaan will seek. Their equipment goes under the name Avalon.
Oh, Avalon. Oh, right. So the circle is complete. The fintech revolution that is crypto is now being re-entered into the overall financial markets, and it has now transformed those financial markets in ways that we'll now see take another revolution around between traditional finance, crypto finance, traditional finance, and these two are catapulting themselves into a new financial reality, crypto dominated. Remember, the denominator for the new economic reality for planet Earth is Bitcoin.
It's important to note here, however, that they're seeking money from investors who would ordinarily go to one of those legacy stock exchanges. They're not going to crypto investors in an ICO. I think partly also if you understand the whole chip making industry and the mining equipment, they're number two, this company. They have 15% of the market. Number one is Bitmain. And essentially, maybe cryptocurrency investors might know you can't compete with Bitmain. Even Intel can't compete with Bitmain, as Marshall Long told you in the previous interview. So maybe they're like trying to exit the business because at one time Bitmain might own 100% of the market.
Well, it's different than owning crypto. If you're buying a miner, there's a lot of different risks associated with that. And I think your warning is prudent for people who think that they're getting into crypto. You're getting into the mining aspect, the hardware piece of crypto, and it has a completely different risk profile. But as always, caveat emptor.
They aim to begin trading in July. They are also a Chinese-based mining equipment maker and chip maker, ASIC miner. But now I want to turn back to another story that we've been following, and in terms of why Bitcoin and all of these blockchain sort of enabled new media alternatives, the censorship-resistant aspect of these is so important, and why we discuss all the time the censorship resistance of a financial system. So right now, SWIFT can be turned off for certain people. You can censor an entire nation and entire peoples of tens of millions of people who live in Iran, millions of people who live in Venezuela. They just get censored from transmitting data, financial data across the world. Here, Twitter continues their own crackdown, partly because various partisan groups are angry at other partisan groups. Twitter will hide more bad tweets in conversations and searches. Twitter will begin using a wider range of signals to rank tweets in conversations and searches, hiding more replies that are likely to be abusive, the company said today. Comments from users that have been blocked, muted, or reported for abuse will be less visible through the service, CEO Jack Dorsey said.
Right, so it's censorship. And that's what happens with free speech, is that eventually it empowers and enriches people who then use their power to curtail free speech. So this is the ugly side of democracy and freedom. And fortunately, I know of two Twitter competitors that are coming online that are Bitcoin crypto enabled. And Jack Dorsey, who is a keynote speaker at Consensus this year, if he wants to go against the crypto crowd, he will be disintermediated just like every major bank.
Well, this is part of that legacy system. He is listed, Twitter is listed on the New York Stock Exchange, and he is trying to sell the service to legacy advertisers. So he himself is very much into Bitcoin, in fact, and he's developing various Bitcoin applications, behind the scenes. But here he is, having to, these are the vulnerable points of a censorship sort of system where you're censored easily on these legacy systems. And a lot of people, I have to say, you're not going to get 100% conversion to censorship-resistant financial systems, to censorship-resistant media platforms. So a lot of people do want a walled garden. They do want to not hear any voices. Whether or not that's healthy for the entire diversity of the organism that is a body collective of a society, I think just tune in to MSNBC and then Fox and watch what has happened to America, where people don't need to hear opinions that contradict anything they believe, that only reinforces everything they believe, and they can basically censor all the stuff they don't want to hear. Censorship
destroys a democracy's metabolism in that it prevents the growth of all stakeholders who are incentivized to participate no matter what their opinion may be. And censorship resistance is pro-metabolism for any ecosystem or society. And that's why it's going to beat the cancer that has become U.S. media of hyper-partisanship that has created these echo chambers of deceit.
Now, one thing that Edward Snowden said soon after his epic journey from Hong Kong to Russia and into exile is that he was asked, I remember, something like, how will you know that it was worth it? Like, was it really worth it? And he goes, as long as things change and people do something about this, and I'll feel like I have succeeded and it was all worth it. But I think, a lot of people don't mind being surveyed. They seem to not react negatively to this sort of censorship, to these sort of what many people in the crypto community might feel is very abusive. Here's a story. Alexa and Siri can hear this hidden command. You can't. Researchers can now send secret audio instructions undetectable to the human ear to Apple's Siri, Amazon's Alexa, and Google's Assistant. So you could be sitting there having a conversation in your living room with your partner, your friend, or some intimate person, your family member, and somebody could be sending commands to your devices around you, your Internet of Things listening devices around you, and doing things. The article points out, the researchers say, well, they could order something online for you, for example, that you won't even hear the command. It's being spoken right there in the room with you, but you can't hear it. But of course, it could do more nefarious things eventually.
Well, the human being is not evolved sufficiently to succeed in this 21st century. Our senses did a remarkable job of keeping humans alive for a million years in terms of being able to hear, see, taste, feel. But now, since the algorithms and the machines and the robots have evolved past humans' capabilities to see more, hear more, understand more, feel more, we as humans have to prepare for the fact that we are now becoming extinct.
Yeah, because who writes the algorithms? It's the algorithms that are controlling these things, and the algorithms that can hear messages that you can't, because our human ear is not as evolved.
Right. Now, somebody will stop and say, well, a human wrote the algorithm, and that's false. The algorithms write the algorithms. The algorithms have jumped the genealogy of humans and are now evolving on a parallel track. They are now running the show. And they are evolving and breeding and having their own version of DNA, and they are creating their own subset of culture and society and organisms, and they are metabolizing and growing at a rate much faster than we are, and we're becoming extinct, full stop. That's the fact.
So the article points out that these deceptions, that it could be tricked by an audio attack, it's called, illustrate how artificial intelligence, even as it is making great strides, can still be tricked and manipulated. Computers can be fooled into identifying an airplane as a cat just by changing a few pixels of a digital image, while researchers can make a self-driving car swerve or speed up simply by pasting small stickers on roadsides and confusing the vehicle computer vision system. But as you say, they could start gaslighting us eventually as well.
So. Absolutely. Let's say you're in your house and your refrigerator goes to war with your toaster. Yeah. And the refrigerator sets an algorithm set up for the toaster to eject toast at a speed that would strike you in the head and kill you. Okay, now you're caught in the crossfire between your Internet of Things at war with each other in your kitchen.
By the way, importantly to note in this is a shocking thing. There is no American law against broadcasting subliminal messages to humans.
That's false.
Well, this is what they say, let alone machines. The Federal Communications Commission discourages the practice as counter to the public interest. And the television code of the National Association of Broadcasters bans transmitting messages below the threshold of normal awareness. Neither say anything about subliminal stimuli for smart devices.
Wow. I thought it was illegal. It's just discouraged?
Yeah, it's discouraged.
Holy mackerel, we're doomed.
Well, courts have ruled that subliminal messages may constitute an invasion of privacy. But
it's an invasion of your subconscious mind.
Yeah.
Right? They're invading your subconscious mind. It's a violation. It's like you're getting a knife stuck into your subconscious mind. And you're being murdered subconsciously. And you become a zombie, like a zombie bank. Well, on that note, we're going to take a quick break. Don't go away. Much more internecine war between refrigerators and toasters coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to E.L. Herzog. He's the founder of Bancor, a decentralized liquidity network. E.L., welcome.
Thank you.
All right, Bancor, exciting project. I've followed it since its inception. First of all, the name refers back to a famous guy in economics, right? So
Yes.
Walk us back a little bit to the beginning of Bancor and the reference to Keynes.
So basically, 1944, all the leaders, the economic leaders, the financial leaders of the world, they meet at Bretton Woods. And there are two offers on the table. One is an offer by the famous economist Keynes, which is called Bancor, to create a supranational currency that will be kind of the reserve currency for all nations and balance the trade between them. The other offer was to use a gold-backed currency that was later changed to be the dollar, and that was the offer that was accepted. You know, you can imagine after World War II, the United States is very strong, and they actually start to use the dollar as the world reserve. And it was backed by gold until 71, as we all know it.
Right, so the backed by gold, and then it was severed in 71, and now we enter a period of fiat currencies, referring to other fiat currencies, what I call infinite regress, or one turtle standing on another turtle, turtles all the way down. People sometimes make that joke about what holds up the world, infinite regress. Now, had we gone with the Bancor with Keynes after World War II, what would the world be like today, in your view? Because was it just going to go to a purely fiat system right after World War II, or what did we miss during the interim?
So Keynes actually quoted as saying that we will live to regret that choice. And his main argument is that you should not use a specific nation currency as the world international reserve currency, because that would give an unfair advantage to the issuer of that currency. And I think he was right. And if we wouldn't take that route, then we would have a much more balanced international reserve currency or supranational reserve currency in the form of Bancor that would have to serve all nations, and not all the decisions that are made regarding, how much to print out of it is made by a single kind of player in the game. So that, I think, would be a better situation.
Had there been blockchain and crypto back during that period, it would have been an easier sell, because the facilitation of such a vision would have been more obvious how to create it. So enter Bancor. So Bancor, you get this vision, I guess. You had, this can be possible now with blockchain. So how did that happen? What was the moment when you decided, this is possible? And walk us through that a little bit. So,
I was, before the whole crypto revelations, I would call it, I was the founder of a company called McAfee, which was a video sharing site, was second to YouTube, but it's a winner takes it all game. And I learned a lot about user-generated video and how it changed the world, where we became from just consumers of video to that anyone can broadcast a video all of a sudden. And it's really changed our entire culture. And when I saw Bitcoin, I saw, oh my God, this is the first user-generated currency. So now people or anyone can generate a coin. You don't even know who the guy is. And that was kind of the inspiration to start working on local currencies, to see how people interact with currencies that they create. And we created a lot of local currencies and a system for that, and it was very successful for a while. But then we saw that it's not sustainable. We tried to research that, and I'm cutting a very long story short, and we figured out that the problem was lack of liquidity. Those small currencies, those local currencies were not liquid. You cannot buy them, you cannot sell them, and because there was no price discovery. I mean, if you peg them, it's really not a different currency. It's just the same currency. And we started to think, how can we solve the problem of price discovery and liquidity for small currency? Because it obviously cannot work with the current exchange model and market makers and order books. That wouldn't work because no one would like to trade them.
Okay, so for folks watching who this is some new information, describe price discovery in a quick description.
Price discovery is basically the process in which you have two different currencies used by two different groups. And obviously, in most cases, people from that group would want to buy stuff on this group and vice versa. What should be the conversion rate between them? So today we use an exchange-based system where you have an order book and people can post order. It's like,
All right, let me say this and tell me if you agree. You've got some buyers and sellers, and you've got to create a price that satisfies both the buyers and sellers. That's the discovery price. You've discovered that price to clear that market.
Essentially, that's what happened. And today, it's like last trade. You have a lot of orders, sellers willing to sell for a price, and buyer willing to buy. And those are like the market makers. They put those orders, and then you have those market takers that actually leverage those orders. So it's like a kind of a bidding system, if you will, but it's a big arena where everyone can play, and we see the last trade that happened as like the current price.
Okay, so on the floor of the New York Stock Exchange, you've got people showing up, and they have shares of IBM that they want to sell, and they have shares of IBM they want to buy. And then there's the specialist who's responsible for price discovery or clearing markets, matching those orders on the book. You guys at Bancor have let's say, a virtual market-making technology, correct? You don't actually publish prices based on buys and sells. It's a different system, and this is really, I guess, the secret sauce, if you will, the value added that Bancor brings. So can you describe that?
Yeah, so if on exchanges, the market makers are essentially the liquidity providers. When you want to actually convert, you will buy it from some market maker that put an order in place. With Bancor, the market maker is a smart contract, immutable, decentralized smart contract that actually holds two currencies and allow liquidity between them. And it's a very straightforward smart contract. And as you buy one currency, it becomes more expensive. As you buy as you convert to the other side, it will become less expensive. So it is doing the same thing. I like to describe it as like a self-driving car technology, but for market makers rather than drivers. And it works. We have like 90 different tokens that are being traded on Bank today. It's the largest decentralized exchange. And I think it's the largest exactly because it doesn't have market makers, because market makers are here to make profit. If you think about it, the largest corporation on earth are market makers. They make a lot of money from that. And if you automate that, so the end user gets all those savings because it doesn't need to pay them.
Right. The market maker will create a spread between the buyers and the sellers, and they will capitalize on that spread because in order to have the ability to match orders, if there is no liquidity to match those orders, they have to go into what they call their inventory. And that inventory is created by constantly creaming off this spread for themselves. And so this is an automated version where you don't have that intermediary. So it's a market making without that intermediary. And now, am I correct if I say that I can show up with any size order to buy or sell, and you will fill that order at a price because you're not reliant on an inventory system? So is that correct?
So I would say yes, but if you have a very large order compared to what is deposited in the smart contract, because if you have more deposited in the smart contract, then you have high liquidity. For example, with EOS, which is very popular, we have $10 million on each side of the smart contract, $10 million worth of EOS and $10 million worth of BMT, which is our own token. And that provides very high liquidity. You want to convert $100,000, it would move the price 1%. But let's say there are some relays of a small long tail currency which are just $100,000. And in that case, you would move the price a lot if you try to convert $100,000, like almost 50%. So if you want to use like a smaller relay, you want to take your time and spend, convert $2,000-$3,000 every 10 minutes, and that will give time to arbitrageurs actually to rebalance the prices with external exchanges. Because what arbitrageurs do in any market, not just in Bancor, they're like the liquidity movers. They move liquidity between arena when they see price differences.
So you're outsourcing price discovery
to
arbitrageurs. And to a degree on these large orders, because the book itself doesn't execute, but you stagger it, and then you're getting price reference.
You can say that because for currencies that, let's say, traded on Binance with a $100 million volume, so obviously the price discovery will happen primarily on Binance, and that's the true for anything that is traded on multiple exchanges. That where you traded most, that will be the prominent kind of sweet spot of the price discovery. And arbitrageurs, they translate that price to all the other exchanges by essentially closing the price differences where they see them.
Because Bancor is both a coin and an exchange, it's like people don't describe Bancor as an exchange. They describe it as a coin. Now, for example, I know Binance, and I know Shapeshift, and I know Changely, and I know other exchanges, and people are very familiar with those exchanges. But they don't mention Bancor when they send those exchanges. Why?
So first of all, I think Bancor is very new, and it's not literally speaking an exchange, because the world exchange means that you give something and I give you something in return. And there's no matchmaking in Bancor like you have on exchanges where you have buyers and sellers being matched. It's actually asynchronous, because you can buy now and I can sell tomorrow, and that would work. So the word exchange maybe is not the best word, and this is why we call it a liquidity network. It's something.
But that's hard that's hard to get over. Doesn't roll off the tongue. Like, it's hard to talk about Bancor because you're doing something that's not really obvious. Like, it's not obvious, even though it should be obvious.
I agree. The good thing is that we have a very easy to use user interface for all of that, and we see a lot of people using it every day. And when you use it, I think it's the easiest thing to understand it, because within a single transaction on Ethereum, you can convert.
Do you go on CNBC? Have you been on CNBC talking about this?
No.
Okay, why not? I mean, they have all these other exchange people on there. You said you're the biggest liquidity provider in the crypto.
The biggest decentralized exchange. The centralized exchange are still much bigger. I mean, if you measure at Bancor against centralized exchange, we're probably 50 or 60 in size. But in terms of decentralized exchange, which is like a new wave of exchanges, there are several, we are the biggest. And I think that decentralized will take over, as it usually does. When you decentralize something, it usually takes over the entire thing, but it takes time.
What about on the security front? So a lot of problems these exchanges have are that they are getting hacked all the time, and people are losing funds because they are centralized.
Yeah.
And the kind of the buzzword of the year is decentralization. And we hear about this now applying to exchanges. You guys are like the first maybe not the first,
not the first,
but certainly a very large one. So is the security protocol, is it of a higher standard, would you say, or less of a security threat?
We don't have security challenge. That's the nice thing about it.
Why is that?
Because every exchange is essentially a transaction that the user signs on his computer. We don't have access to any of the funds, and it's just the end user. It's like it's like Bitcoin. Each user is essentially responsible for his own wallet security. Centralized exchanges, they take the responsibility from the user, and sometimes the user prefers that they don't need to be responsible for their own security, so they rather have some centralized exchange keep the money for them. Now, not always working for the end user, but sometimes it does.
How about this quick question? So in the space, Keynesianism, it has a bad name because this space is filled with Austrian economists and the idea of individual sovereignty. And Keynes is actually a vilified figure in this space. Is that like a branding issue?
I've heard that from hardcore economic,
Yeah.
but we're not associated with Keynes. We're just associated with that specific proposal. So even if
But
you're not,
memes travel quickly, and people get it in their heads, and they, it affects their behavior.
and that's we accept that as I think again the best proof and the best thing that we aspire for is for people to use it. We don't. If you think about most of the products on Earth that were able to make a difference, did that because a lot of people used them. So we're really focused on getting more and more people to enjoy the platform, to give us feedback, to improve it. I think that's how you win in this internet space and blockchain space. Not by hype and not by brand. You just do something people like.
Great. Yael Hertzog, thanks for being on Keiser Report.
Thank you for having me.
Well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank Yael Hertzog. He's the founder of Bancor, a decentralized liquidity net.